down the hammer and pick up the pencil. You're about to listen to the Savvy Radio Show. Learn from real-life real estate investors, experience revealed with the Savvy Landlord as your host.
All right, ladies and gentlemen, boys and girls from around the world, you tuned in to the Savvy Radio Show. Man, real estate, finance, investing, hot topics all over the place. But true wealth is built on consistency and education. Man, this is a hot topic for me for many years because I found self-directed IRAs a long time ago. I've mentioned on the podcast 101 times. Read the book, self-directed handbook. Anyway, I thought my man, when I was doing research on Adam today, I thought he wrote that book, and then no, he's written 9 other books. And we'll get into these details here shortly, but I'm just honored to have Adam Bergman on the podcast today on the Savvy Radio Show. He is the founder of IRA Financial. In a previous life, he was a tax attorney. We'll just leave it at that. So Adam, what's the damage of why'd you want to be an attorney to start off? A tax attorney at that, even doubly.
Yes, that's not super exciting story. I basically graduated university and my dad's like, what do you think you're going to do? And I was like, I don't know. He said, well, you should probably go to law school since you're pretty much unemployable because you don't really have any skills. So I wrote the LSAT. I did pretty well. And I went to law school and didn't know I wanted to be a tax lawyer till my second year when I took my first federal income tax law class. And it was really the only class in law school that actually made sense. It was like a puzzle, right? You kind of look at the tax code, you find the answer, and you can apply it to the facts. And it just made a lot of sense. I enjoyed it so much that I did an extra year of law school. So I got an LLM in taxation. After law school, 4 years of law school. God, got to be crazy. So I know, of tax law.
Give me a case study that motivated you. Like, was there some wrongdoing? Was there some fraud? Like, what happened with that case or those case studies that you studied that stuck out to you?
You know what? It just made sense. It was the only thing. I always wanted to be an entrepreneur. My father was an entrepreneur. My grandfather was an entrepreneur. I always wanted to be an entrepreneur. I just didn't know what I wanted to do. So I felt that tax law gave me the best opportunity to kind of understand how businesses work, really from the inside and outside. And it's kind of gravitated towards it because when I finished law school and I finished my LLM master's program, I got a job at a large international law firm in New York City. And I got to work on really interesting, sophisticated, cool, cross-border, M&A, corporate acquisition, private equity deals. And that's what I wanted to do. And it really helped me, in my entrepreneurial life because I was able to kind of understand and navigate some of the complex financial rules.
Now, the transition from being a tax attorney into the financial investments and in an industry that a lot of people don't even know what is it, like 1973 did the self-directed IRA come about? I mean, how did you make that transition? Like what compelled you to leave one successful? I mean, there's such a major need for tax attorneys.
Stephen, it's luck. Honestly, I was 8th year tax associate. I was making a lot of money. This is back in 2008. And I was always itching to do something entrepreneurial. Just didn't know what I wanted to do. Kind of tried a bunch of different startup options with friends, and just like nothing took off. So I kind of was like, okay, maybe I'm just gonna be a lawyer. Like maybe this is my destiny. And then I had a client in kind of the spring of 2008. He wanted to use his IRA to invest in a hedge fund. And I got asked to do the research. I had no idea you could do this, right? I never heard of a self-directed IRA. I thought all retirement investments had to be in publicly traded security. So I remember doing some research, finding the answer that yes, this industry exists all the way back from 1974 when ERISA was created. And yes, you can do it. So I remember telling the partner I work with saying, hey, did you know about this? And he's like, no, I actually never heard of it. Pretty cool. And I started doing some researching online. And I saw there were a bunch of companies out there with like really bad tech, really high fees. And I thought, hey, there's an opportunity here. I can use my tax background, add technology, add better fees, fairer fees, better service, and then have a very compelling product. And that's what I did. I quit my job and started IRA Financial in like end of 2009.
I think it's cool that we live in a free country that you can start.
God bless America.
To be a custodial. Break down like the process, like the regulatory. I mean, it's really kind of loose to me in being a custodial. Or before we get into that, explain what a self-directed IRA is. Some people may not know that. Let's just get to the basics, and then we'll get into deeper.
Hey, Stephen, I had no idea, right? Like I always tell people, I'm a pretty smart guy. I mean, I went to law school, a master's in tax law, worked at some of the biggest law firms in the world. I never heard of a self-directed IRA, so don't be ashamed. Basically, it's very simple. A self-directed IRA is an IRA, right? Just we all heard of an IRA, 65 million IRAs out there. That is allowed to invest in alternative assets, right? The only difference is the word self-directed IRA does not appear in the tax code. You can call it anything you want. You can call it an Adam IRA, you can call it a Stephen IRA. It doesn't matter. The word self-directed IRA doesn't mean anything. All it means is an IRA that is allowed to invest in alternative assets, not just publicly traded securities like stocks, mutual funds, or ETFs, but real estate, alternative assets. And there's only 3 things you can't do with an IRA. 3 small things. You can't buy life insurance. You could in a 401k, not an IRA. Can't buy collectibles like art. And thirdly, you can't self-deal, meaning you can't do any transaction that in any way, directly or indirectly, personally benefits you, your lineal descendants, your parents, children, spouse, daughter-in-law, son-in-law, or any entities 50% or more controlled by such persons. Otherwise, you can do it. So there's an endless list of investments you can do. And the benefits is all the income and gains generated from that investment are tax-free, right? So they go back to the IRA without tax. So you're able to capitalize on the power of compounding returns. Rule of 72, every 8 years, your money will double, assuming a 9% rate of return. And that's really how smart people get richer, is they invest in tax-efficient solutions.
It's a wonderful instrument, but a lot of people don't know about it. Like, and I know that I was working with someone one time and they had a bunch of money in their IRA and I helped them convert it, but their financial planner was anti, like they didn't believe it. Because since it's relatively new, it's only 50 something years going strong. How do you navigate that where a lot of people are suspect about it? Like shouldn't Fidelity run my money?
They should.
They've already got a financial planner that within their job. They don't understand. Like, how do you walk people through that process? It's like, look, I have a couple $100,000. It's not getting me a good return. I know that I can buy this house and real estate. I can give you so many transactions that have been done and that it's tax-free. How do you walk someone from something that has no idea to get it to them to convert to a self-directed IRA?
Right. So let me tackle the first part of that question, if I may first. So there's a reason Fidelity and Schwab don't want people to know, and why a lot of RAs scare people about alternative assets and IRAs is because they do not make money. When you take your IRA out of Fidelity and Schwab and buy a piece of real estate or lend money to a friend or a neighbor or invest in a private, local company, they make money when they sell you products. So even though IRAs and alternative assets, there's never been a wall. When Congress created ERISA in 1974 and created IRAs and 401ks, there was no wall between traditionals and alts like real estate. The wall was created by the big banks and financial institutions that said, hey, we're going to wall you off because we can't make money when you buy real estate or buy the local house or invest with a local developer. We make money selling products on our platform. So that is why they scare people and lie to people and tell people that you can't do this stuff.
Shouldn't do it.
And it's crazy. I've been fighting this fight. So I've written 9 books. I'm writing my 10th that I'm going to release hopefully in a few months, really about, it's called the new 60-40. It's around the new portfolio that people should be investing more in alts and a retirement account. But it's easy, simple. The problem is, and it's no one's fault, it's just the big guys are basically walling off these opportunities from the masses. And trust me, the smart, rich people are doing this, right? Like, Stephen, you're a smart guy, you're pretty successful. Like, you've been doing this, right?
For a while.
Unfortunately, a while. But most people don't know about it because their investment advisors or big banks are basically walling them out.
So for me personally, I just love that I have control. I can actually tangibly see that asset versus I'm buying a stock that I'm hedging on someone's personality or their sexual preference on TV that could shoot the stock down, and then my total nest is gone.
Yeah, like I'll double click on that. So like, I started buying Bitcoin in 2014. Okay, I remember my financial advisor, I wanted to put 50K in Bitcoin and from my Roth IRA. And my advisor said, Adam, don't do it. It's too risky. It's stupid. You're crazy. You're crazy. You're crazy. Same with a private investment I did. Same with a real estate deal. Over the last 12 years, those 3 deals have basically like 4x my IRA. If I listened to the guy, I'd have 4x less money because I'd just be buying stocks. I would have done fine, but I wouldn't have been able to generate the alpha that's going to make me and my family rich.
Plus, it's tax-free.
Plus, it's tax-free.
Let's be clear. All right, let's get into you as an entrepreneur now. So what was I know you're a hustler. You want to make money like I do. So, but what's the risk in building this IRA financial? First of all, a lot of people don't know what it is. So half the time you're educating people. That's why you wrote all these books.
Yeah.
What's the risk it took to build it? And I know you have over $1 billion or something. I can't remember.
7 billion.
5 billion is what I read.
Yeah.
7 billion in assets. So that took a lot of dog and pony show to convince people. My friend of mine just goes and speaks at real estate investment meetups just to educate people without even getting a client. Just don't even know what the word custodial is. So let's just kind of break this down a little bit more on you're in control. Now you have to be arm's length away, right? You can't benefit from the IRA. And then a lot of people are confused between the bank and custodial. Give us the answer for that. Like, what is a custodial?
It's a great question. So under the tax code, under section 408, 3 types of entities can hold an IRA. So Amazon, Walmart cannot hold an IRA. A bank can hold an IRA. Okay. A regulated financial institution can hold an IRA, like Schwab or Bank of America. Okay. And thirdly, a state-chartered trust company could also custody and hold the assets so long as they have a charter from the state. So IRA Financial is a state-chartered trust company. So we are regulated and we have the expertise to hold alternative assets. Schwab and Bank of America could do this if they want. The issue is they don't make any money and they're so focused on the traditional 60-40 model, right? 60 stocks, 40% fixed income. They don't really want to get into alts. Even though the marketplace is growing tremendously, they just haven't found a way to capitalize on those products. They will eventually because the market is expanding. But all you have to know is a custodian is just an IRA institution or a trust company that is regulated to hold and custody the assets. IRA Financial, we generally don't compete with Fidelity or Schwab because we're not really involved in stocks. Even though we have a stock platform, we have expertise in alternative assets, non-publicly traded securities like notes or private stock, real estate, and that's what we do.
So what's the biggest hurdle that a lot of people objections that they say like, hey, let's open up a sub, but what's the experts they disagree about? Like there's a constant push and pull. What it's the common thread that you see?
Well, the first one you touched on already, it's just the lack of knowledge and the fear of the unknown. Oh my God, you're going to take the money out of the S&P 500 and buy real estate or invest in hard money loans. And oh my God, that's risky and so hard to do. And that's just, false. It's super easy to do. You can make your own investment decisions. Like there's no excuse with AI. AI can literally analyze any deal and basically come down to you and explain to you like the pros and cons of any deal. So the education is number one. Number two, sometimes there's lack of funds, right? Sometimes people just don't have enough money in their IRA to get a deal done. And that's where I think working with a company like IRA Financial, our expertise, where we can help our clients navigate those rules and figure out ways to get the investment done in the most tax efficient way. Third is an ugly 4-letter word, and a lot of people know about, something called UBIT. Mm-hmm. Unrelated business income tax. Stephen, you probably know about it. It pops up in real estate if you use leverage to invest. So let's say you put $100K in your IRA and you get a loan for $100K. The loan has to be A, non-recourse. You can't personally guarantee it. And B, if you use an IRA, there could be a UBIT tax. Although there's ways around it, right? I can get you into a 401k. I can block it. So you got to work with the right team. And I think that's why, IRA Financial, that's what I'm most proud about is what we're doing is we don't just set this stuff up and say, okay, you're on your own, go hire a lawyer. No, we actually are with you. We partner with you. And we have a team of in-house accountants, lawyers that will literally provide you compliance, tax reporting, tax filing service. So you can just focus on investment and we literally do everything else.
It's awesome. So when do you think this alternative assets will become mainstream, right? There's still this, these big corporations push the traditional. This is a new alternative. Like, do you think the industry will ever catch up?
Oh, yeah.
I mean, I know it's because when I started this thing, it was only like maybe 10 years ago. It was still only 3 or 4 big custodials. Now there's hundreds all over the place. But is it ever going to be mainstream? Would it ever be an alternative? Like as an employer, will people say, hey, use this? What's your take on this? Will this ever catch up?
Yeah, I mean, the president is trying to. In August, he issued an executive order to allow alts and 401k plans. The Department of Labor on March 30th just came out with guidelines, basically safe harbor, saying if you do these 6 things, you're going to be safe and you can offer alternative assets in a 401k. So we're going to see how that plays out over the next few months. But yes, there is a huge, huge trend because what's going on? Americans are not diversified, right? Most Americans invest basically, but 7 companies, right? It's not 500 companies. It's 7 companies. We all know who they are. They basically are controlling the economy and they're controlling the markets. So we're not diversified. So God forbid there's a crash, like we're all in deep trouble. Okay. So I think the president, I think the administration understand that we want to give Americans more choices, more options, and we want to get them better diversified. And the honesty is that the big potential where the huge opportunities are in private investments, right? The people that make money in companies that go public are not when they go public. It's when they buy the stock privately. That's where all the growth is.
Right.
So what's happening now is the rich people are getting access to those investments and the regular Americans are not. And I think the administration is saying, we want to change that. We want to make alternatives safe, more mainstream to give more Americans choices.
Yeah, and then we need more choices. So, all right, you have over 25,000 clients that have joined and growing. What's the one thing you wish every investor would understand before they called you? It's like you beat your head against the wall.
Nothing. Just call us. Honestly, don't worry about it. Like that's why we're the tax experts.
Okay.
If you want to do something alternative, don't worry about trying to figure it out yourself. Oh, should I do an IRA, a self-directed IRA, a 401k? Just call us or text us or message us. We'll help you. We have free consultations. We want to hear from people. We will help you navigate those rules and generate a tax efficient structure. You don't have to be a tax lawyer to do this. It's very easy. You just got to be an investor that believes in an investment.
What's the ratio of like people that do real estate versus gold versus like what's a good, some people are just completely ignorant about this. Like what would you recommend? Is there diversification in alternatives?
Yeah, there absolutely is. And a lot of it depends on age, right? Someone in their 30s may invest differently than someone in their 70s. But I think the main buckets, personally for me, are you want exposure to real estate. I think you want some exposure to private stock, whether it's through private equity or venture capital, because the huge upside and the illiquidity premium, right? Because if money's in a retirement account, you can't touch it. Sure. So you might as well get paid for being illiquid. And those types of funds will give you potentially high returns. Hard money loans. I've done so well. I know we talked about this offline. Like I've done so well getting 12 to 14% steady returns in a tax-free account. Whereas if you did hard money loans with personal non-retirement money, you're paying ordinary income tax.
Right.
So hard money loans, real estate, some crypto, some gold, private stock. I think that's how you want to build a diversified portfolio.
All right. So man, you're intense. You're awesome.
Yes.
You're on it. I don't even know how you sleep. I mean, you've written 9 books. You're a founder. I mean, how big is your staff that you have now? Yeah.
So we've close to 100 people, and we spend a lot of time, obviously, training. That's most of my day, other than like writing, doing videos and blogs. Is I talk to my team, and we go through case studies, and we go through different scenarios to make sure that like we're all on the same page. Are there different ways, different structures, different tax efficient models that can work for our clients?
You know, it's interesting. A lot of attorneys don't write books. Okay. I mean, it's just a common thing and founders are busy. What is your driving force? I mean, it's great marketing, educating before they get there. Like, is this some kind of narcissistic thing to beat yourself up? Because I've written a few books myself and it is like giving birth. I'm just guessing, sorry, women out there, but it's intense. Like,
I love it. I honestly love it. It's like my time. I do a lot of writing on the weekends. I wake up either early, Sunday morning. I do a lot of great writing. I love it. It's something I just, maybe it's why I became a lawyer. It's the only part I really liked is writing. And I just like writing. I like educating. I like finding different ways to teach people about the power of the self-directed IRA. Because I've seen it with myself. I've seen it with my friends, family, and my 27,000 plus clients. Like this is how you get rich. Is you take advantage of the power of compounded returns. You don't pay tax on your returns. You diversify. And that's how rich people get richer.
Right. So what book you wish more investors would read? just because there's a lot of folks, we talk about books on here. Like, you can mention your own book. Like,
Yeah,
I have a book. I'll send it to you. It's called Be the Bank. And it's basically, it's a two-sided book. One side is from my perspective, trying to borrow money from someone, and then a wealthy person trying to lend money, and then trying to bridge the gap between. So when people have any interest to the loan or any interest that they need to get funding, I'm like, read this book. It's an easy read. It works. People just buy the book and pass it out to high net worth people, and it works. What's a book for you that just works in your world? Just clarifies what you're trying to accomplish, your mission. It could be yourself. What's a book?
I wrote a book, COVID 2021. I think it's called 7 Figures at 70. And it's basically this whole plan, like, hey, do these 3 things and you're gonna have $1 million tax-free at 70. And it's really simple. Like, start as early as you can, whether it's an IRA or 401k, just put in as much as you can. Be consistent, right? Good habits. Just even if it's a tough year, you can't put in as much as last year. Put in something, whether it's $100, $500. Keep your habits. And third, the easiest part, trust the process. Be patient, and you're gonna get rich. It doesn't matter necessarily what you invest. You want to diversify correctly, but the system is rigged in our favor. It's the only area that Democrats, Republicans, Independents agree. If you look at the 2 biggest pieces of retirement legislation, it's the Secure Act 1 and 2, 2019, 2023, there's almost unanimous consent. I know a lot of members of Congress on the Ways and Means Committee and Senate Finance Committee for senators. They all get along. They may kill each other in other areas. They all get along when it comes to retirement planning and taxation, because it works, and that's how Americans get rich.
Man, you're on fire. All right, you've done this before. You have this great quote: "The future of retirement isn't Wall Street alone." Boom, because I'm diversified in both ways. It's empowering individuals to invest where they believe. What does investor empowerment look like in the next decade? Because there's chatter about people not investing at all, not buying any real estate. They want to rent. Like, what do you think? What does it look like for you?
Well, I mean, I think personally, if you're not owning assets, so the Americans that are getting left behind, and that's an issue in this country, is because of the huge asset appreciation over the last 6 years after COVID, some inflation. The Americans that are getting left behind are the ones that don't own assets, don't own real estate, and don't own stocks. So I think what's going to happen with AI, and I'm pretty bullish on AI, is for an independent investor like you and me, Stephen, we're going to have all these opportunities to really dissect deals, really without hiring expensive accountants, lawyers, and banks, and understanding the economics of a deal, looking at deals differently because of all this data is going to be so freely available. Yes. It's going to make us better investors and better self-directed and richer investors.
So true. I use AI to invest, just do ratios and reports for me quickly. Like, I'm thinking about this asset. Why? All right. Let's just go into some fun stuff here. What's the most creative investment you've seen at a retirement account? Like a strip club?
God.
I'm just playing. Like,
no, I've seen people invest in real estate in Zimbabwe, Lebanon. I've seen investments in almost any country. Wow. The coolest thing I saw,
cross state line. You can cross country. I didn't know
country
that.
Everywhere. Yeah. The coolest thing I saw, this actually happens all the time, and this is something any American can do. I had a client that he took around, I think it was around $55,000 5 years ago. He invested in a private business he actually was involved in. He owned less than 50%, and his Roth IRA ended up owning it was under 20%, and that 55,000 turned into $135 million.
Wow.
And again, I'm not saying I can do that, but we all could do it, right?
I would run the numbers on it. What was the tax savings?
Massive, right? Even if this capital gain is at least 24%. So, and then that's without state tax. So, wow. He saved over probably $30 million.
Yeah. Sorry, I didn't mean to cut you off. Sorry.
Yeah, that's what I'm just saying. Like, we can all do, whether you're investing in a local restaurant or a local AI company or anything. Like, if you see an investment you can buy low in that has high upside, you would do yourself a favor by learning about a Roth IRA and understanding that you should buy that asset in a Roth IRA.
Man, we can go on and on. I'm telling you, we're halfway there of my questions. So drink some water, get ready.
Yeah.
All right, let's put on your tax hat. Or just this kind of a detailed mindset compliance. What do you think about regulatory? Where's it heading? Regulation. Is it going to
Well,
be pretty loosey right now? And I know that
yeah.
I just, a lot of people don't know about it. I haven't really, in my case, I have a default on an IRA that, I loaned someone money. I didn't get it collateralized. I mean, that's not negative. That's just my own fault. So regulation seems to be pretty kosher. Like, what's your side? Do you think they're going to tighten it up?
Well, I think it's political, right? If you look at the IRS and the SEC during the Biden administration, it was definitely like more enforcement focused, and now the SEC is definitely more pro business under the Trump administration. The IRS obviously is still auditing folks, but they have less people. So I think that changes every 2 to 4 years. I think ultimately you still want to stay, within the parameters of the rules. You want to do what's right. You want to work with the right company that can help you protect your retirement accounts. But I always tell my clients, you don't have to worry about any IRS, audit or anything. We'll handle that, but you're not going to do anything wrong. Okay, you're going to be investing within the parameters of the law. So don't worry. Just focus on your investment.
All right, let's get a little bit more detailed about, I know we'll just call you or call your firm to kind of go walk you through the process. But if someone wants to do an IRA and do a real estate deal, kind of walk us through that process. Like, how does your firm work? So people have an idea before they call and, maybe got the right paperwork ready. Tell me the
Absolutely.
process.
There's really not much you have to do. So you can call us if you just want to chat and kind of understand what the rules are. That's perfectly fine. Some folks just will go on our website or our app. They'll start an account process. Takes, I don't know, 4 minutes. Your basic info. We'll get your account approved generally, that day. And then you'll tell us where you want to move the money from, whether it's Schwab, Fidelity, former employer. We'll do that for you. We'll initiate the tax-free transfer of funds. And then once the money hits, we're going to let you know, hey, your money has arrived by email or text. And then you're going to tell us where to send the money. Hey, I want to invest in Steve's real estate deal. You're going to upload any documentation, whether it's a contract, subscription doc, a note, operating agreement. We'll execute that on behalf of your IRA. We'll also give you the option of setting up what's called a checkbook control LLC, where the IRA is the owner of a limited liability company that you manage. So you have even more control because you don't even need to go through IRA Financial to get your investments done. You as a manager can just write a check or execute a wire or do a Venmo and get your deal done. And then we wire the money and then we handle all the administration. Literally, any IRS, state, federal, partnerships, tax forms, you don't do anything. Literally, we do it all. You just got to focus on your investment, hopefully maximize your profit, and you're off to the races.
So, of course, burning question, everyone's thinking, like, is there fees? Obviously, you have to get paid. Is it a percentage, flat fee? How does it work on your firm?
Yeah, so I've been pretty strict on this. We have flat fees. I don't believe in assets under management. I think if you're paying assets under management, you're crazy, because again, this is a self-directed account. You're doing the work. I'm not. I'm not telling you to buy real estate. I'm just holding it. So why the hell should I charge you more because you're smarter than me? That's crazy. So you can open an account for under $500 flat a year. We have an additional service. Our compliance service is included in year one. After year one, it's just $300 a year, $299, and that gives you tax consulting, access to all our tax professionals, tax reporting, tax filing. If you have a partnership return, a corporate return, if you have to pay UBIT, a 990T, 1099s, 5498, we do it all.
Cash, 10,000. You said 10.
Yeah.
And we're 8,300 form.
Yeah, everything. We do anything related to the IRA. We're going to do for the $300, measly $300, and that's the service. We don't really make any money. It covers our costs, but I feel as a lawyer, I have to provide that service, because the worst thing I can do is open an account for someone, leave them on their own, and then they get into some trouble and they have no way to, have someone that has their back.
So you want to come across as a full service firm, right? Not
Yes.
Interesting. I've had 2 IRAs. I mean, one IRA that I've moved to 2 different custodials. And my main drive was because it was flat fees. And then that firm got bought out. And then they try to charge a different fee and I moved to another. Right. Interesting. So is it competitive in your space? I mean, a lot of people, again, this is still new to society. And I can see you're a differentiator already. I mean, I love your unique selling position. You provide full service, but what questions should people know? How do you how they should compare your company versus? I mean, they just don't know what they're getting. If someone refers them, they usually go with them. But there's some questions that people should know and ask. What happens if this happens? What if this happens?
100%. So first of all, there's a lot of great companies in our space. We're all friendly competitors. Why? Because there's 65 million IRAs out there. There's $19 trillion in IRAs. There's $1 trillion of rollovers each year from 401ks to IRAs. So we're a volume type of industry. We don't need to fight for every client. Now, of course, I'd love to work with every single American if I could, but there's a lot of good players. So the questions I would ask personally, if you were my brother or my sister, is number one, the flat fees, as you mentioned, Stephen, you want to go with flat fees. Number two is expertise. Do they offer solo 401ks? Do they know what checkbook control is? Can they get me in different products, right? Do they offer health savings accounts, cover deals? So I would ask those questions. Thirdly, are they going to support me, right? If I have questions, are they going to tell me go hire a lawyer or an accountant, or are they going to help me answer those questions? Because unfortunately, I can tell you as a tax lawyer, I have clients that I used to work for that are 100 times smarter than me, that were the partners I worked for. But guess what? This is really niche, and they don't know this space. I've been doing this 16 years. This is all I know. So you want to make sure that you're working with a company that will set it up right, but also give you ongoing support, administration, compliance, tax filing, so you can do your thing, focus on your investment, and you don't have to worry about anything else.
Man, I'm impressed. I'm out of questions. You pretty much answered all my questions.
Man, what
did I leave out? Like, what would you do? Would you do anything different? It doesn't sound like you would. I mean, maybe start earlier. I think you had a great timeline.
In life, you gotta have some luck too. I think it was the right time too. I think if I started the company maybe 20 years earlier, alts were so niche. Maybe it wasn't right. But again, I want people, if you take away anything from this, even if you don't want to do a self-directed IRA, you should understand the power of the retirement system. So every American should have a Roth IRA. What is a Roth IRA, right? A Roth IRA is an after-tax IRA. Okay, anyone can put money in a Roth IRA. You just need income. You can even be Jeff Bezos, because there's no income limitations through what's called a backdoor Roth IRA, where you make an after-tax IRA contribution and then tax-free convert it to Roth. The power of the Roth IRA is once you're 59 and a half and the Roth's been open 5 years, everything you pull out is tax-free, not $1 of tax. So every American in 2026, you can put away $7,500 or $8,600 if you're over 50. If you have no access to a 401k at work, you should run to your local bank or IRA Financial, whatever you want, open a Roth IRA and start saving. If you buy stocks, you buy real estate, or do investments with Steve or his crew, I don't care. IRA Financial, we don't sell investments. We're totally neutral, agnostic. I want to help people unlock their money and become tax-free millionaires.
Right. Absolutely. Tax-free. And a lot of people just don't know. So how do we find you? IRAfinancial.com. That's the simplest.
Yeah, go to IRAfinancial.com. You can hit us up on, you can watch, we have some really great YouTube videos. I spend a lot of time doing videos, just educating people. Go to our website. You can, if you check out my books on Amazon. There's a 10th one coming, which I think will be pretty good. And just learn, right? With awesome. AI and the internet, there's no excuses. All the information's at our fingertips.
Yeah. Man, I had a good time. I don't know about you,
Thank you.
I think it was very informative, quick, down to dirty. Adam, you were incredible.
Same, dude. Appreciate the opportunity.
All right. Thanks for coming in, being on the show. Appreciate you.
Thank you. Thanks for having me.
All right. Take care.
Bye.
Thanks for listening to the Savvy Radio Show. Glide online and listen to our other motivating episodes at savvyradioshow.com. Connect on Twitter at LandlordBook, and always be buying assets.